Hello traders, Mark Chapman here, the creator of the trademark Trap Traders Concepts. Welcome to today's Trap Traders Trade of the Day analysis. I hope you had a lovely weekend. It's a fine sunny summer morning here in the UK. Today's date's the 21st of August 2017, and it's a very typical Monday. There is zero on the news wires. The markets are dead. There's no real catalyst out there today on the news calendar to make anything improve to any degree. So what I thought I'd do is I thought I'd just do a little bit of training for you. Actually, it was this chart that caught my attention. It doesn't really matter now. It's kind of gone. It was on the Canadian Swiss offered daily chart fairly recently, as you can see, and it's just an unusual stop hunt, a big spike down. See if you can spot it. I'm just going to walk you through the level first and foremost. So you've got a level of support in here. It's like an internal level. Nearly said interior level there. Internal level where price has bounced off, loads of times. People are clearly buying off the level, and then you have this more prominent level here in terms of how price reacted at that level. It was very much a pivot where price just went to and turned away, and so you're going to have stops under there too. So basically, all in all, what you've got is an area where there's lots and lots of money sitting, and it's not a precise level, which is usually something that I advocate, because if the level is precise, then it's just an easy target. But sometimes there can be a variation on the theme, and this is one of them. So as in anything in trading, you've got to be a little bit more open-minded, a little bit more creative, and willing to accept there are many ways to skin a cat. And even if a process is X, it can look many different ways. So for instance, a manipulation of a financial instrument, it always looks different, but ultimately the process is always the same, right? Big institutions need to find these sweet spots, these environments where they can manipulate price and execute efficiently. And unfortunately, a lot of traders are not understanding those processes, so they're just getting caught up as collateral damage, cannon fodder for the institutions. And as unfortunate as that is, there are ways that you can learn to see what they do so that you can trade with them. It's just unfortunate there's not that much information out there really showing you how to do it, and that's what we try to do here. So you've got all this money sat there from people buying, and what that ultimately equals is a lot of sell orders in and around this location. So as I said, this is not precise because it's over two different levels, as it were. And then you have the actual stop hunt itself. And if you need to do a lot of buying, you need a lot of selling to occur. So by price creaming all those stops, that triggers those stops, and in the face of that selling, something big starts to buy. And the buying in this space, because it's efficient to buy here, right? They won't get nailed with slippage. All right, there's lots and lots of liquidity in that location where they can do business efficiently and effectively. Now, it's not that these people weren't right wanting to be buyers. Unfortunately, though, so did the institution, and the institution isn't going to buy where you're buying because it's too crowded. If everyone's buying at a level, how are they going to be able to trade? There's not going to be enough sellers for them, right? So that's why this has to happen out of necessity. So there's the opportunity to go long. There's another opportunity to go long as well, and look at this. What happens is, price breaks down through this level, starts trading off the underside of that level, and you start getting a little bit of a mini trend structure, right, where price is breaking out and retracing into that prior level, and people start selling. Breakout traders obviously are selling at the breakouts. Now what is happening in here is this is convincing more people to do what? Sell. Right? And what they're not seeing is this. and they don't realise what went on in there. A huge institution was very, very eager to buy in this area. So it follows that if you start seeing some type of trap, some type of failure in here, these, you know, unsuspecting traders are going short into an area where an institution wanted to be a buyer and did do some buying. Why did it come all the way back into that area, you might ask? Because if an institution has to do a certain amount of business and then they weren't capable of getting it all done, all that work done off those levels, because there just wasn't enough sell contracts, then it will be manipulated back into that location, so that then people start selling again, and that gives them the opportunity to get all of that final work done, and then off to the races price goes. So just a very interesting trade, very interesting chart, very interesting type of manipulation. As I said, manipulations of markets have many different guises, but ultimately once you understand the process, it's always the same. It doesn't matter how unusual it may present. And by the way, it's a good thing if you understand how to see it, that it presents slightly differently, because that means hardly anyone's going to catch on to it. No one's going to really realize what's going on, and they're not going to see any coherent patterns. And so that's a good thing. We want that to remain the case. So if you'd like to come and join me in my brand new inner circle, click on the link below this video. If you like this video, share it with your friends, hit the like button, and I'll see you on the inside.